NASDAQ comp, gap open up, pre-market price action related to what is the primary identity? The pre-market futures. This is what it is. No one's been sitting there buying and selling that Google all day. There's 44,000 shares traded, but you're gapping up $12.78, $8.75. This is everything that we talked about, MMTs, is when you hit that bottom, is that the VIX and the VXN, like we said over the weekend in the training, and we said last week, is now that we did go up in the fear indicator, which, by the way, the high was lower than the previous high, and with this gap down on the opening bell, the amount of gap up open is going to gap those fear indicators down to a certain point and a certain level. The trade management MMTs, once they exhaust that intraday high price action from the gap, the bear is trapped below the Friday's closing bell. As they get on the opening bell, there'll be a buy to cover that will go down. Stocks will pull back in the platform. If they stay elevated toward 55 and higher all day, and you will be looking for the intraday high ratio reversal number in your SMF platform, so that once the buying exhausts itself, you're going to get on the other side of that, and that's going to be your short. Be cautious about the fact at what time level in the price action it is, because I can tell you why. They will come down once the bear has to buy to cover in these big nice gaps that we have and everything that we talk about. If you look at the gap open down today, you don't have but the SQQ. There's the bear. And the other side of that is the TQQ bull. That's the only thing that you got a gap open down on. However, MMTs, we talked clearly about long-term bear trends off of their bottoms set up, and how the bull trends in their reversal pattern related to how a bear is setting up a long-term trough is that the volatility will stay elevated at extremely high levels in the price action. The bear and the bull here, and how this bear sets up its own trend within the price volatility, and then how the bull sets its own trend up at its price resistance volatility. And when that price action moves in, that's where that the transaction is going to come in on that side of that part of that trade. So the bear is trapped, and the gap open up list increases. Look at here. Gap open up. Look at that price line we talked about. We did a video. That price line was at a 2011 closing on the low of a major 2011 current year-to-date trend line. Got a 9.55 gap ratio. So that one's going to hold, but watch that video that we did over the weekend related to that price line. So these are all volatility gaps in pre-market, and they're going to, look at here, you got that travel zoo up 3.49. Okay, and you got win. Let us not forget that one. We make a market on that one every day. Okay, we make our markets on Sina every day. There's that bull. Look at that. That's a 3.56 ratio price action gap in the SMF trading platform. Look at here. Apple 6.50. Netflix got a Netflix 6.29 ratio. Baidu. So these are the names that will intraday exhaust themselves within their volatility range. They will fade back. The trick for the MMT is to clearly understand that if the pullback is in a diminishing contraction to, let's say, a 2 teeny drop depending on the value, and you're holding support, and bam, you're hitting that buy bar against right away. Boom. The move is starting right back up, and the same price volatility, meaning that the price action is leveraging up and they're buying that side of the market. That's the side that's being computed. That's the upside leverage from the close of Friday. And there's some really nice gaps right here. Google's gapping up. Look at that. Close at 490. This is the kind of stuff that we were talking about last week, MMTs, and over the weekend. This is what we spent our whole time focusing on, where that secondary bottom comes in within the original price action volatility, where the downside had ended and it got price support. This is a gap now within that original channel range from last week. I'm going to conclude the pre-market video on the NASDAQ futures. Oh, by the way, on the NYSE gap open up and down, same thing applies. I don't even need to do it right now. Same thing applies. I'll show a snapshot in it. But first of all, look at this Apple gap. There's that 356 again on the close. And here, they're working. So when you open up, something like on Apple, it's going to go up and it's going to hit its top. Remember, Apple trades different than some of the others, but you do have 239,000 shares in pre-market. Look at that right here, and we open in 10 minutes. Welcome, everybody, to the NASDAQ pre-market price action gap open up dollar price action. It's inflated on the opening bell. And trading ranges and volatilities and the VIX and the fear indicators and various other components need to be applied to the opening bell MMTs and some of the bear and bull ETFs.